I just want to ask you about a comment that Fed Chair Jay Powell made yesterday. In his congressional testimony, he said the recession that followed in the wake of the coronavirus epidemic could widen income inequality for minorities and those on lower incomes. I'm wondering what role can or should the SEC play in addressing these issues of economic inequality?
Well, let me first say, Bob, I share Jay's view. I think times of stress have shown that they do drive greater inequalities, and we need to be mindful of that. Here at the SEC, one of the things that we focus on is investor education, financial literacy, and to the extent that we have better financial literacy across our society, those disparities are going to be less over time. And it's one of the things that the women and men at the SEC are very committed to, and not just for our markets, but for consumer credit and how it all fits together in your overall financial picture.
Yeah, and you've done a great job on financial literacy. You've got great stuff up on the website, investor.gov. You've done short videos to explain basic investing principles. But I can't help but wonder, financial education and just participation in the financial markets is a lot narrower than a lot of us would like it to be. I think it's put a lot of communities at a certain disadvantage. Is there anything the SEC can do to expand those opportunities besides financial literacy?
Well, I think it does start there, Bob. And financial literacy, it goes to consumer credit, getting your credit under control. The credit can be very helpful. Buying a home, getting an education, but it can also get you into a position where you're not really able to get to a stable financial position in your life. And we want to help people understand that investing becomes part of getting to a more stable financial position in your life. And if you have a more stable financial position, you can weather the difficulties that we are witnessing right now in a much better way. And we're just committed to helping people understand that.
Okay. I want to move on and ask you about a topic that we've been very preoccupied with here at CNBC, and that's this recent surge in retail trading, particularly in some of these beaten up sectors like the airlines, the cruise lines, and even some bankrupt companies that are out there. I'm wondering what the SEC's perspective is on all of this retail trading. I'm wondering if you can tell us whether there is, in fact, a surge in retail trading outside of a few airlines and cruise lines, for example, and what role, if any, does the SEC play here in protecting those investors?
Well, look, Bob, I think your first questions also go to this question. To level set, you're right. There has been an increase in the percentage of trading that is retail trading. We have open markets. We have a disclosure-based system. But our investors, our retail investors, should understand that there are risks in our markets. Our favorite kind of retail investor is your long-term, retail investor who builds their wealth over time through investing. There is risk in being a short-term market timing participant, and it does make me nervous. I just say that people are perfectly able to do it. We let them do it, but just remember, there is risk in short-term market movements.
Chair Clayton, it's Sarah. Just to follow up on that question, how closely, if at all, are you looking into a platform like Robinhood, which has also seen an explosion of amateur trading post-crisis? Are they safe, those investors?
Well, let me be clear on something that we've done here with regulation best interest, which goes into effect at the end of this month. This was a long journey for the Commission. We have substantially increased the responsibilities that brokers owe to their customers when making a securities recommendation. And they have a care obligation.
I'm sorry, I didn't hear you.
Conflict obligation. Can you hear me?
Yes.
Yes, you're good, Mr.
Okay.
Chairman.
Sorry. We have a care obligation. We have a conflict obligation. And we expect brokers to be fulfilling those obligations and for their customers to understand what they're purchasing.